Hello, I'm Hazem Seeker. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics.
I believe that this is a tremendous setback for North Korea and indeed a setback for the world.
Let's call the whole thing off, how investors are reacting to the collapse of the Trump-Kim summit in Singapore. Out of love with Europe, why Italy is the latest country to push back against Brussels. Plus, edging higher, we look at the pressures on black gold. It would have been the first time a sitting US president met a North Korean leader, but it wasn't meant to be, at least for now. Donald Trump has pulled out of the landmark summit, which had been set for June 12th, a move that Pyongyang has called extremely regrettable. Trump's announcement in the form of a breakup letter came just after North Korea said it had blown up its only nuclear test site in a goodwill gesture to reduce regional tensions. The decision sent world stock markets tumbling, with China posting their worst trading week in more than a month. But in the longer term, what does this diplomatic uncertainty mean for investors and economically for the region? Well, joining us now from Singapore is Deborah Elms, Executive Director of the Singapore-based Asia Trade Center. Good to have you with us. So is this an opportunity lost then for the region?
The summit itself? I don't think so. I think it was always questionable whether the summit would take place here in Singapore. It's still possible that a summit will take place at some point in the future. But I don't think that people really had counted on it actually taking place as planned on the 12th.
But in the longer term scenario, was there perhaps an opportunity here to bring North Korea back into the international arena, so to speak, and open up all kinds of trade possibilities further down from there?
I mean, there may have been, certainly, and there's always that possibility in the future. At some point, you would like to think that North Korea would be brought out of the pariah status and back into the global community. When that will take place is a little unclear. Sooner would be better, certainly on behalf of the North Korean people. That would be fantastic. But there are some real challenges to getting that done. And the more that the U.S. side in particular talked about the Libya example, the harder it is to get North Korean elites to go along with the strategy, because in their minds, the Libya example is either death or prison, and neither one of those outcomes sounds particularly attractive. So if you are a North Korean elite, the last thing you want is the Libya example repeated again against North Korea.
Yeah, I think you're referring there to what the U.S. National Security Advisor John Bolton had said, in which he used that example. You think that is perhaps what killed it for the North Koreans and what led to their tougher rhetoric on this?
Well, I think if you look back over the history, that this is not a regime that's been easy to deal with, no matter who's in charge. But I do think that the use of the term Libya and the repeated discussions about unilateral disarmament are very difficult kind of language to use before you even had the opportunity to sit down and meet for the first time. And when you set that up as the initial goal, I think it's even harder to get the North Koreans to come to the table. And I think what you saw was increasing North Korean anger, leading the U.S. to cancel the summit. And so I don't think that's especially surprising. You've got two sides who are both disruptive type leaders, and it's difficult to get two disruptive type leaders to get together when they have never met before and when they both practice a certain kind of diplomacy that is about sort of bombast and threats, and it's hard to see how those two kinds of leaders can get together in a sort of peaceful summit kind of fashion.
And what does China get out of all of this? They are, of course, North Korea's closest ally, and the argument has been made that they may have had a hand in this, basically telling the North Koreans, hold on a second here, you need to take a tougher line on this. And the result is that the argument has been made that they have leverage now. China has leverage now with the U.S. in their ongoing trade negotiations here. Is there any truth to that, you think?
Well, I think the Chinese are probably okay with the summit being canceled because it was canceled for nothing to do with China. And the Chinese, in this case, were not the cause of the cancellation. So they cannot be held accountable, I don't think, for anything that the North Koreans may or may not have done or anything that may have resulted from the summit itself. So in this case, China, I think, is probably satisfied with the outcome. They did what they could to get the Koreans to agree to go to a summit. The U.S. called off the summit. Chinese probably feel like they've done what they can.
How does this impact their trade dealings with the U.S. At the moment? Because that is another track, and the U.S. knows that China has a lot of influence on North Korea in their trade relations with them.
Now that gets a little bit more difficult. I mean, one of the reasons why you might argue the United States has been relatively nice, or at least this would be some interpretation of U.S. policy, relatively nice to China, especially around the ZTE. The sanctions the United States wanted to propose to ZTE was to get China's cooperation on North Korea ahead of the summit. If the summit is not going to happen, then the question is, well, how long is the United States going to continue to be nice to China? If the summit gets postponed altogether or gets postponed to the fall, are the Americans going to continue to be pleasant to the Chinese, or do they say, never mind the North Korean summit issue, we now will pursue with all vim and vigor the Section 301 arguments that we've been having and impose tariffs against the Chinese, go after them for IP, intellectual property rights theft, go after ZTE as we had originally stated, and so forth. And if that happens, then the Chinese will be probably less happy that the summit was canceled than they are maybe at this very moment.
And where does this leave the South Koreans and all of their efforts at trying to get this whole rapprochement between North and South and between the United States and North Korea?
Well, I think the South Koreans are clearly I would say, the most unhappy of them all. I was in Seoul last week with many of the top folks in the South Korean government, and the level of enthusiasm for this summit was palpable, from the highest leadership down to very junior people, really excited about the possibility of finally ending the threat of, nuclear war right on their border, very enthusiastic about a different approach. Maybe this would be the one that solved the problems. And so to find out that not only is the summit canceled, but that the U.S. did so without even notifying the South Koreans first, has got to be incredibly disappointing, disheartening, anger-provoking. The South Koreans have got to be saying to themselves, what else can we do? How else could we solve this? How reliable a partner is the United States now? It puts them in a very awkward position.
Good to speak with you. Deborah Elms in Singapore. Thank you.
Thank you.
Now, as Italy puts the finishing touches on its new coalition government, there's growing concern in the EU over its Eurosceptic stance. Many are focusing on the prospects of Europe's third largest economy at the hands of a big spending government. We'll talk more about that in just a moment, but immigration was also a major issue. Lawrence Lee has that.
You can't live like this with any dignity, but this Roma community is forced to try. The municipality stopped rubbish collection years ago, so it's piled up everywhere as people try to sell scrap. There's barely running water, so they have to improvise everything. Most are Italian citizens, and many work, but they won't show their faces because they fear their employers would fire them if their identities are discovered. Matteo Salvini, the leader of the far-right League Party, routinely tweets that they are gypsy thieves and he will bulldoze their camps. Of course, the Roma people have seen all the messages and they're outraged at this assault on them.
It's pure propaganda. It's racism. The word Zingari, gypsy, shouldn't be used at all. He talks about bulldozers as if he will be the one to come and clean up the camps. He shouldn't be a politician. He should do something else.
The threats are already attracting the attention of human rights advocates, even before the new government is formed.
These politicians don't realize what the situation is. You can't expel Italians. The ones from the former Yugoslavia are either here legally or they are stateless, so no country would take them back.
In the election here, nearly 1 in 5 Italians voted for the League Party, and so plainly it isn't difficult to convince angry, disillusioned people that Europe cares more about outsiders than ethnic Italians. Of course, whether or not they're serious about bulldozing these places and trying to deport European citizens, there's a different question about the sort of language that's been used and its consequences. In the new government, Mr. Salvini would be in charge of home affairs, the police and immigration. During the election campaign, a Nigerian migrant savagely murdered an Italian woman, and Salvini said this.
An 18-year-old girl should not die, cut into two pieces and put into a suitcase because a Nigerian illegal migrant drug pusher was wandering around Italy freely.
The next day, a man draped in the Italian flag shot several migrants in the eastern Italian town of Macerata. Mr. Salvini would of course deny he is speaking for a fascist fringe, but rather for millions of Italian people angry that they've been left to deal with a massive immigration problem by themselves. Nor is Italy the only country threatening mass deportations. Germany is currently trying to remove 30,000 Nigerians. But there is no question that threats are parts of the new politics in Italy.
Well, joining us now from London is Lynne Graham Taylor, Senior Rate Strategist with the Netherlands-based Rabobank. Thanks very much for being with us. So this economic plan that the new Italian government has put forward involves sharply increasing spending, repealing reforms of the labour and the pension market, and in doing that, directly violating the financial limits set by the European Union for countries using the euro. Are they really on a collision course now with Europe?
Yeah, I think it's fair to say there's been a very hard line taken by the major political players in M5S and the League, and it does look very much like they want to increase spending, and that will put them on a collision course with officials in Brussels. But
is there, if I could put it this way, is their bark bigger than their bite? Is it just a lot of talk at this point? I mean, how serious are they about this? Yeah, I think the jury is out on exactly the extent of their plans that they'll be able to implement, let's say over the next 6-month period. Perhaps they'll only be able to go for some of the more tokenistic elements of their of their sort of joint agreement. But the fact is also there's quite a lot of strength behind their feelings about the stuff they do want to implement. And almost regardless of what they do, if the rhetoric stays up, it's going to impact the bond markets. So, funding Italian spreads are going to go on, certainly, be biased to the upside on headline risk. Yeah, I mean that's the essential point, isn't it? It all comes down to how the markets react to this, and will that be the kind of deciding factor in all of this? I think it will certainly play an important role in the background. Obviously, a lot of the fact is Italy has a very high debt stock so it has to be on the minds of policymakers. They might want to say in public that they're not going to be held hostage by the market, but ultimately the funding cost of the state is a pretty important thing, and so they have to bear that in mind. And as you say, Italy has a high debt at the moment, but we're talking as well about Europe's 4th largest economy here, much bigger than Greece, which is now finally appearing to come out of its economic malaise after something like 8 years. What implications does a country like Italy have? What ripple effect could that have across the bloc? Yeah, I think for the first time, really, over the last sort of 6 or 7 years, we've seen a gradual wind down and attenuation in the market's minds of existential questions about the future of the Eurozone. And I think those have effectively, definitely the questions we're being asked those have come back to the forefront of people's minds. And once they've been thought again, they can't be unthought. And so I think you're going to see there has been a structurally higher level of peripheral yields, even if there has been to some extent a decorrelation between the likes of Spain and Portugal and Italy. And yeah, these thoughts can't be unthought, and I think that added premium is here to stay. And what are the markets looking at as far as the new Italian Prime Minister, Giuseppe Conte? Something of a political novice. Is he equipped to handle all of this? Yeah, I mean, to be honest, I think at the moment a lot of the focus is just on who exactly is going to be the finance minister. That's almost seen as a more important role going forward. It's very much, he was as a PM, he was very much a consensus choice and someone that they could both agree on. But we might get much more of a steer on what sort of policies they're likely to implement and
on the negotiation process with Europe once we get exactly who the new finance minister will be in the government. Although actually all of the most talked about candidates are to some extent looking for quite a hard line when it comes to negotiating with Europe the deal they want for Italy from the other members of the Eurozone.
And just going back to those ambitious spending plans, the big question that comes to mind is how are they going to pay for all of this?
Well, I think essentially there'll be some hope that there'll be some higher growth, but it looks like that effectively they'll just be running a bigger budget deficit and hoping that obviously the hope amongst the politicians implementing the policies is it feeds through into higher economic growth and becomes self-sustaining from a budgetary perspective.
Lynne Graham Taylor, thanks very much for being with us.
Thank you.
Still to come on Counting the Costs. What's behind the rising price of oil and how is it affecting the global economy? Our oil is currently trading at a near 3-year high. Conflicts in the Middle East and the 2015 Iran nuclear accord breakup have pushed up the price because of potential global supply risks. To add to this, OPEC and its allied nations have been curbing output since the start of last year. So how worried should consumers feel, or is it now time to accept whatever the market dictates? Well, joining us now from Geneva is Jacomo Luciani, a professor at the Graduate Institute in Geneva and the co-director of the Executive Master in Oil and Gas Leadership course. Thanks very much for being with us. So do you think, first of all, oil prices are set to go higher to perhaps $100 a barrel?
I don't know that they will go to $100 a barrel. What characterizes the situation today is that there really is no tension in terms of physical quantities. Demand and supply are supply is sufficient to meet demand. There is no reason in fundamentals, so-called, why the price should go up. As you said, it's all potential. It's expectations. Maybe we will have less oil in the future if there is sanctions, stringent sanctions on Iran, which all the countries that do not agree with these sanctions will not be able to bypass, or maybe there is going to be an even worse crisis in Venezuela. But for the moment, there is none of that.
But Saudi Arabia and other OPEC nations want these prices to continue to go up. They've been cutting supplies in the hopes that that would happen. So it appears that that strategy is working, is continuing to work.
Yes, it does. Saudi Arabia has been talking prices up. Russia less so. In other countries, even less so. For example, Iran, the Iranian Minister of Petroleum, has said that the price should not increase much beyond $60 per barrel. So opinions differ. Surely demand has been increasing quite rapidly over the past few months. Over the past year, we have had an addition of 1.7 million barrels per day to demand. And so eventually, supply also has to increase to meet this demand. We have to wait and see what the point of equilibrium will be.
And where does the U.S. Shale oil fit into this? Because as these prices continue to go up, does that increase the incentive for U.S. producers to start pumping out shale oil again, which is cheaper to do?
Absolutely, they are doing this. Shale oil production is increasing. Its effect on global prices is not felt very much because of several, especially transportation bottlenecks. We have, again, a situation in which there is a large gap that has opened in between the so-called Brent price, which is a price for oil delivered in the North Sea, and WTI, which is the price for oil delivered inland in the United States at Cushing in Oklahoma. So this has opened again. It's $7 or more. So there is a significant difference to the price of oil, so to speak, internationally, and the price of oil in the United States, indicating that there is abundant supply in the United States. But once sufficient pipeline is established to export more of U.S. oil, this differential will tend to decrease. And U.S. exports will have a dampening effect on global prices.
So what's all this going to mean then for consumers, particularly for motorists? Prices at the pump look set to go up, and we've got the summer driving season coming up as well. It's gonna take a hit on people's pocketbooks, isn't it?
Yes, exactly. And what we need to see is what the reaction of consumers will be in the United States and elsewhere, because there is always a delusion, I believe, an impression which is wrong, that consumers do not react, that demand will not react to changes in prices. Even recently, the Saudi Minister of Petroleum has said consumers can pay more. Well, maybe they can pay more, but the question is whether they will pay more. If confronted with this increase in prices, they may very well react by reducing consumption, and this is again a factor that may dampen prices in the future.
So what's at stake here for Saudi Arabia then? They've got this big Aramco IPO coming up, the big state oil company sale. They've got lots of ambitious and very expensive domestic projects, and they've got to continue financing the ongoing war in Yemen. So they're going to do everything they can, aren't they, to keep these prices high?
Well, Saudi Arabia, like all producing countries, must find a balancing point in between their long-term interests and their short-term interests. In the short term, clearly, they are interested in having high prices because that improves their financial situation. That's very normal. But high prices may discourage demand. We should not forget that people expect demand for oil globally to peak in the more or less near future. This might be by 2030 or soon thereafter. So the more you drive the price up, the more it becomes probable that consumers will react and that some demand will be destroyed. It's this effect of demand destruction that must be looked at very carefully, because if you push prices too high, demand will be destroyed. And so in the long run, you may be losing.
Jacomo Luciani, thanks very much for your time. Now, if you caught last week's show, we told you all about GDPR, if you remember, the big European Union legislation on data protection. It's now come into effect, and you have been seeing the results of it already. Lots of emails in your inbox from companies basically asking if you still want to hear from them. Businesses now need to ask for consumers' consent to harvest data, so people will have to actively opt in, and consumers have the right to know if their information is being used and for what purpose. Companies in breach of GDPR can be fined up to 4% of annual global turnover. Now, staying with tech, French President Emmanuel Macron has called for more openness and honesty from technology companies. Facebook's boss and other industry chief executives attended a summit in Paris along with political leaders. The discussions come after Mark Zuckerberg was grilled by members of the European Parliament on the use of data and fake news. Now, Sony is to buy a controlling stake in EMI Music Publishing for $2.3 billion. The Japanese company wants to strengthen its music portfolio. The deal will see it get a catalogue of more than 2 million songs. The 60% stake in EMI is part of Sony's growth plan built around content and streaming services. The deal still needs approval, though, from the regulators. And police in Malaysia have seized nearly $30 million from apartments linked to the family of former Prime Minister Najib Razak. Najib's been accused of pocketing millions of dollars of public money, including from State Fund 1MDB, which he set up in 2009. He denies any wrongdoing. And that is our show for this week. Remember, you can get in touch with us by tweeting me at @HazimSeeker, and do use the hashtag AJCTC when you do, or drop us an email. Counting the cost at aljazeera.net is our address. But there's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That is it for this edition of Counting the Cost. Remember, the news is up next. From me, Hazim Seeker, and the whole team here, thanks for joining us.